pick the right stock at the right time.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a weak start after the US Federal Reserve kept interest rates unchanged, highlighting no bias towards either a hike or a cut in the future. The Securities and Exchange Board of India has ordered the National Stock Exchange to pay a fine of 1,000 crore rupees for having violated stock exchange norms. State-run NBCC has now asked the Committee of Creditors to reconsider its bid for JP Infratech, even as the COC has begun voting on an offer from Suraksha Asset Reconstruction Company. And GST collections for the month of March came in at 1.13 lakh crore. That's the highest ever collection since the rollout of the tax in July 2017. And finally, auto sales for the month of April will begin on a weak note in all probability. Maruti's sales fell to the lowest in 4 years, while Aisha's Royal Enfield also reported a 17% fall in sales compared to last year. Well, let's begin with the big development from overnight. Despite pressure from President Donald Trump, the US Federal Reserve has kept interest rates unchanged and also held back on indicating that the future move is likely to be a rate cut. Fed Chair Jerome Powell said that the low inflation is likely transitory and that it will be pertinent to wait and watch before making any moves. Kathleen Hayes of Bloomberg News tells you what all of this means in this report.
Federal Reserve's forecasts do not always come true, but it's clearly what Jay Powell is counting on now. And it's interesting because in their policy statement, they did acknowledge that inflation was falling away from the 2% target on the headline, on the core. So when Jay Powell got up to speak at that press conference, I think people were waiting to hear something along, maybe even opening the door a tidge to a rate cut. Not at all. Here's what Jay Powell said.
Core inflation unexpectedly fell as well, however, and as of March stood at 1.6% for the previous 12 months. We suspect that some transitory factors may be at work. Thus, our baseline view remains that with a strong job market and continued growth, inflation will return to 2% over time and then be roughly symmetric around our longer-term objective.
Let's jump around Bloomberg Library and look at a chart that's going to tell you the story in pictures, what Jay Powell, I think, is alluding to in words. He isn't concerned about this right-hand side of the chart where you see the two key measures. The headline, which is the yellow line buffeted by oil prices, down to 1.3%. But look at the core. It takes out food and energy. It's at 1.5%. Jay Powell said during the press conference, well, you know, there's some transitory, some temporary factors. Portfolio management services prices has to do with market fluctuations. They're down now. That could go back up. Apparel prices, clothing and shoes, extraordinarily weak. That should come up. Well, I don't know, Mr. Powell. I don't know if you shop online, but a lot of people do. That's a big price depressant for those kinds of things. Airfares is another one he cited as being temporary. But Matt Bosler from our Bloomberg Eco team in New York saying this, you can only look at these factors, these temporary ones, for about half of the drop in that core. That's not explained here. He did say that he sees the current policy stance as appropriate, so neither a rate hike nor a rate cut is needed. Obviously, President Trump begs to differ, but it's not just President Trump. A lot of people are saying there's more signs of weakness around the globe. Fed funds futures traders are pricing in about a 60% chance of a cut this year sometime.
All right, well, that's the expectation at least. What happened, in fact, resulted in an impact on Wall Street. In fact, the benchmarks ended at their lowest point of the day after making a positive start. Ranita Young of Bloomberg News tells you what happened during that session on Wall Street in this report.
U.S. stocks are falling on Wednesday as the S&P 500 drifts back below that record high it hit not too long ago, and the U.S. Federal Reserve deciding to keep rates the same. Now, there also was a quite big surprise in tech stocks, which outperformed after Apple reported upbeat earnings. Now, Apple's forecast actually beat analyst estimates, and trade-ins and discounts sparked an iPhone revival there. Quite the bullish surprise for the company that's nearing $1 trillion market cap that it actually topped last year. Advanced Micro Devices semiconductor beating, or meeting rather, its analyst estimates, with earnings. Groupon shares rising after the first quarter adjusted earnings per share beat the highest analyst estimates. However, Royal Caribbean Cruise Lines actually cut its full-year adjusted earnings per share view after it missed analyst estimates. And we do have other earnings coming up soon: Kraft Heinz, Sprint, and Norwegian Cruise Lines, among others. Meanwhile, the U.S. Federal Reserve again held the rate steady, saying that patience is still a key word there. And this also happens as inflation continues to drift below that 2% target rate there. The Fed is saying that solid job gains along with lower unemployment rates helped to fuel that decision. That helped send the U.S. dollar higher versus major currency competitors, and the Bloomberg Dollar Index got a boost as well. And this all happens as trade talks resume between the United States and China, which are hoping to strike a deal sometime in May. And that's a look at your Wednesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, that's how the U.S. markets look. Let's move on and take a look at the Asian markets this morning, at least the ones that are open. Rosalind Chin is joining us this morning from the Bloomberg studios in Hong Kong. Good morning, Rosalind. How are we looking this morning?
Good morning. Well, right at the MSCI Asia Pacific Index, the broad benchmark is actually pretty much flat, but just edging into negative territory, down 0.03%. Overall, though, yes, we have seen a lot of volumes out of the market because both China and Japan are closed for a public holiday and will remain closed as well tomorrow for the rest of the week. So right now, let's look at Korea. That the Kospi is up about 0.6% right now. It's coming back, of course, after a break yesterday, which it had, pulling higher, largely also helped by Samsung Electronics, making gains of about 0.5% right now. The Hang Seng Index here in Hong Kong is just open for trade a few moments ago, and that is up by about a fifth, just over a fifth of 1%, actually about a quarter of 1% right now. The big hitters there, AIA Group, Ping An Insurance, Tencent, HSBC Holdings, which has results out on Friday, all pulling higher at this point in this session. And in Australia, though, that is actually a bit of a down market today, losing 0.6% right now. The RBA meeting is coming up next week on May the 7th, and there are some investors looking ahead to that, predicting perhaps there may be a cut. There is discussion that some of the weak data we've seen recently out of Australia could lead to a cut from the RBA, perhaps 25 basis points easing in monetary policy. We also got some bank results coming out today. We had NAB, National Australia Bank, and we saw those shares declining right now, down 0.75% after it said it's going to slash its dividend. But overall, banks in Australia aren't expected to fare too well with their results this time around, partly because there's been a housing slump, but also because of the costs associated with the customer compensation from the inquiry that was going on earlier, and the results of which have come out in the last few months. So that is expected to also hit the bank's bottom line as well, weighing on profits. So we've seen National Australia Bank, for example, losing, also ANZ down by about 2.7% today. So a few factors there moving in the region, even though the two big markets are shut. We've also got, of course, some progress on those China-US trade talks with the Treasury Secretary, Stephen Mnuchin, saying that the talks have actually been quite productive, and the talks will continue in Washington next week. So some movement there, but yes, not a particularly great day on the Asian markets following Wall Street's lower close. Back to you.
Thanks so much for that, Rosalind. Well, let's look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
Big headlines here in the U.S. U.S. Attorney General William Barr saying he will not show up for a scheduled hearing on Thursday about Special Counsel Robert Mueller's Russian investigation. Now, on Wednesday, Barr was in the hot seat before a Senate committee and defended his handling of the Mueller report. This followed Democratic accusations that he misled Congress over its findings. House Judiciary Chairman Jerry Nadler went so far as to accuse Barr of blackmail and said he may issue a subpoena to ensure that he shows up.
If good faith negotiations don't result in a pledge of compliance in the next day or two, the next step is seeking a contempt citation against the Attorney General. The committee will convene at 9 o'clock tomorrow morning as planned. My colleagues will be present. I hope and expect that the Attorney General will think overnight and will be there as well.
To the UK now, the Defense Secretary has been fired for the leak of private discussions about Huawei's role in Britain. Gavin Williamson denies any part of the leak from a National Security Council meeting, but Prime Minister Theresa May said he had not met the same standards that other cabinet members comply with. She added that no other credible version of events existed to explain how the leak occurred. The United States, meanwhile, is ramping up the pressure on Venezuela, saying military intervention is possible if there is no peaceful transition of power in Venezuela. Protests against the Maduro regime are ongoing, although an appeal by opposition leader Juan Guaido for the army to abandon Maduro seems to have failed. The Trump administration is also warning Russia and Cuba to stop assisting Maduro, and that if they fail to do so, there may be sanctions as ramifications. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, well, let's turn to the Indian market now. And remember, foreign institutional investors have been pouring money into this market, the equity market in India. 72,000 crore is apparently what they bought in the first 3 months, or rather in the last 3 months. It was net negative in January. Agam Vakil is here to tell you about today's trade and what's likely to happen with regard to the futures and options space. Agam, what's on the plate today?
Well, we're seeing some amount of weakness showing up in the SGX Nifty futures, and that's likely to play out, at least as far as the opening is concerned, when it comes to our own Indian markets. As you can see, a drop around 72 points. Do remember, it's been a very volatile last couple of weeks, where we have seen sharp movements towards the gains gaining, as well as the the losing end as far as the indices are concerned. And that's something that we are expecting to play out until we have the elections, come through. So as far as the SGX Nifty, the Nifty 50 is concerned, we saw flat movements, in spite of the fact that we did see some very sharp moves last Tuesday. Mid-cap and the small-cap indices, however, did see a lot of selling coming through, as was the case for the Nifty banking indices. But moving on to your ADRs, at this point, we're seeing weakness in Tata Motors and Vedanta. And we're seeing otherwise very, small moves when it comes to others such as HDFC Bank, Infosys, or for that matter, Dr. Reddy's. But coming down to your, institutional flows, at least as far as FIIs are concerned, the flows are starting to taper. And every now and then you do have that big, inflow of around 1,000 odd crores here and there. But on and off, you have started to see a little less coming through as far as FIs are concerned. DIs, on the other hand, have bought around 730 odd crores of stock into the Indian equity markets. And as you can see, the Nifty contributors, we do have HDFC Bank, HDFC, HCL Technologies, Infosys, all providing some amount of support. On the other hand, what we're also seeing is, some weakness coming through Yes Bank. Yes Bank, what a loss and a sharp cut that we saw last Tuesday. Of course, there was largely on account of, the earnings. But let's move in and talk about your futures and options space. And again, very little to speak for in the Nifty futures, or for that matter, the Bank Nifty futures, where we haven't seen too much coming through. Let's move on. And yes, that's the open interest distribution picture, around 11,800, where you have max OI. This is as far as this week is concerned. Today is the weekly options expiry, not a very long one, a truncated one. And in terms of changes in open interest, we do have the 11,800 put, which stands out in trade, naturally, considering we saw a little more writing coming through. But your VIX has remained largely stable around the mark of 22, and your Nifty put call ratio as well is something that has come off to a certain extent by around 1.48. In terms of stocks, we are keeping an eye on, of course, Yes Bank, and to see whether or not there will be some short covering, or is there more weakness in store for this particular bank. IDBI Bank and Exide, among others, are also some stocks we're keeping an eye on. And unwinding, we're seeing HDFC Bank and CG Power. So some names out there to keep an eye on, Alex. But on the whole, let's wait and watch as to where the global indices take us here.
All right. Thanks so much for that, Agam.
Yeah.
Well, let's talk about one of the big stories that emerged over the midweek holiday. The market regulator has fined NSE 1,000 crore rupees for violating the Stock Exchanges and Clearing Corporation regulation in the co-location case. Now, the SEBI has also barred the exchange from accessing the capital markets for 6 months. Sajit Mangat, who's been tracking this for quite a while now, is joining us on the phone line to tell you all about this. Sajit, what are SEBI's findings in this? Perhaps a little context on the co-location case might help. And also, what does this mean for the NSE?
Alex, if you look at, to get into the background, this relates to NSE providing co-location services between 2010 and 2015. There was a whistleblower letter which alleged that some select brokers were given specific access or first access to the entire co-location facility, thereby giving them low latency in terms of feeds, and they were able to do high frequency trade, and they benefited from that. That led to a SEBI probe, and finally this week we saw SEBI coming out with a final order with respect to NSE's co-location and the dark fiber case, as a result of which SEBI has imposed a fine of 625 crores plus 12% interest since 2015. And that would mean that NSE would have to pay nearly 1,000 crores in the next 45 days unless it's going to contest these charges. In total, the total fine for NSE would be roughly in the tune of 1,100 crores, and that's again is subject to contesting by NSE, and NSE has been looking at some legal advice before it decides on whether it wants to close the case by paying this fine, or it will contest it at appellate tribunal. To be clear, NSE's IPO has been pending this decision, and this comes as a good signal to NSE, because it brings in a little bit of finality and conclusion to the entire case, and they know the maximum extent of penalty which they will have to pay, or to the extent of punishment that the regulator will have is providing. It also is important to note that there were charges of fraud on NSE when this case came up, but regulator did not find any of that charges of fraud, but it was more to do with lack of due diligence and not being transparent and fair to all market intermediaries. Alex.
All right, yes, absolutely. Well, it's been rumbling on for some time, this entire thing, so at least they have closure as to what's happened. Thanks so much for that, Sajit. Now, Sajit also did speak to Vikram Limai, who's the current MD and CEO of the NSE, and he says that the 1,000 crore rupee penalty is a stiff amount, given that the exchange, as Sajit says, was not found guilty of unfair trade practices. He also spoke about how the 6-month ban on accessing the securities markets will hamper new derivative launches. Listen in.
It is a stiff number, I must admit, and certainly much higher than what one would have anticipated, particularly in light of what you described, that SEBI's orders says that we are not really guilty of any unfair trade practice or fraudulent trade practice in the colo situation. So from that perspective, actually it's a good outcome for NSE that we have not been charged of any fraudulent or unfair trade practices. And in that context, I wish to reiterate for your viewers and the investors that the faith and trust in NSE is actually rock solid, and the faith and trust in Indian markets is rock solid, as it should be, because we are a well-governed, well-regulated market, and NSE has always stood up for high standards of governance. And we have done quite a bit even in the last couple of years to improve governance standards for the external environment and at NSE, and also to strengthen controls processes, etc., including some of the issues that might have come up as a result of the co-location matter. So from that perspective, it is a good outcome for NSE that we have been exonerated from any fraudulent or unfair trade practices. And so the quantum of penalty with interest, etc., is a fairly stiff number for sure.
Will you be challenging the quantum of penalty?
I can't comment on that. As I said, the lawyers have to come up with comprehensive advice on all aspects of the order, colo and other orders. And there are always pros and cons to any kind of strategy that you pick. And so we will have to evaluate all the options that are available, the pros and cons, and do what is right from an institutional perspective, from a long-term standpoint.
Repercussions of this that you're not allowed to introduce any of the derivative products for the next 6 months. Now that could be challenging for you because you have entered into commodities market where the market is slow to go in terms of growth, but it needs a lot of products to be out there. Are you going to see that as a challenge because 6 months is a big time for an exchange?
Yeah, so that is part of the order, and it is what it is. We will have to wait for 6 months till we launch any new derivative product.
You will not challenge it on that part?
Well, I mean, like I said, I don't want to comment on what our strategy is going to be as it relates to the order. But specific to this point, if we were to comply with this order, then we will have to wait for 6 months in terms of any new product that we want to launch. And that, as you rightly said, from a commodities perspective, given that it's a new segment, there were obviously things in the pipeline that we were planning to launch.
No, final thing is on the IPO. That's something which investors were looking forward. This was a big sword hanging on NSE, and they wanted a certainty before you go for an IPO, or even the regulator approves the IPO prospectus. Now, a finality has come in with respect to the amount you have to pay. Depending upon what legal opinion you get, whether you're going to challenge it or you have to go forward and try to close the matter here. Do we have a certainty on the IPO now? To 2020, it's likely that an IPO will come in for...
Well, I mean, based on a reading of the order, obviously it can't happen for 6 months.
Yeah.
But then after that...
But then you can prepare in the meantime, right?
Yeah. Anyway, any kind of DRHP document and preparation for the IPO would take 6 months, if not longer. So from that perspective, 6 months is not going to really come in the way of any kind of preparation plan and for going public. So from that perspective also, it's a positive because 6 months is a very reasonable period that would have been involved anyway to prepare for an IPO.
All right, now if you want to watch that entire conversation, you'll catch it in just about 10 minutes at 7:30 right here on Bloomberg Quint Live. Let's talk about another big story. NBCC's dilly-dallying on bidding for JP Infratech has meant that the committee of creditors, including home buyers, are forced to vote on just one bid. Now, ironically, the Finance Ministry has said that NBCC did not need approval to bid for the asset in the first place. And this comes at a time when the state-run developer submitted a bid but said that it needed approval from DIPAM before the creditors could consider its offer. Vishwanath Nair has been tracking this like several other cases. He's joining us on the phone line with more. Vishy, what happens to this case? I believe that a letter was sent on the 29th of April to the person handling the case. Will this second bid also be considered now?
Good morning, Alex. So this is where we stand at this point in time. On the 26th of April, NBCC had submitted its rights bid for JP Infratech, where after submitting the bid, NBCC said that its bid should not be put to vote because it still hadn't received some key approvals, primarily DIPAM, as you mentioned, but also from the Ministry of Finance and the Ministry of Housing and Urban Affairs. Now, only after receiving these approvals can NBCC go ahead, or at least that is what NBCC had said at the time of submitting its rights bid. Following this, the lenders, the creditors, as well as the resolution professional for JP Infratech found that NBCC's bid was lacking under certain sections of the Insolvency and Bankruptcy Code, and therefore it was rejected at the time. And Suraksha ARC, which was the only other bidder in this case, their bid was put to vote by the Committee of Creditors. Now, that vote started on the 30th of April and is likely to end on the 3rd of May. Now, what NBCC has done is, on the 1st of May, it wrote a letter to the resolution professional saying that it has received all of the necessary approvals, and that it would still be interested in bidding for JP Infratech. But however, the Ministry of Finance letter that we acted, that Bloomberg Quint, shows clearly that the Ministry of Finance said that because NBCC is a Navratna and because it is only proposing to infuse about 200 crore rupees in the form of equity, and this 200 crore rupees is still below the 15% of net worth sort of mark that the government sets for these kind of investments. Therefore, it never needed a government approval to actually go ahead and try to bid for JP Infratech. So in the light of all of these events, what the resolution professional has said is that there is already a voting process going on. We cannot insert the NBCC plan into the whole process, and therefore its plan still remains rejected. However, if later by the 3rd of May, Suraksha ARC does not gather the 56% votes that are required under the IBC, then maybe there is a chance that the NBCC bid might be considered. However, there is a meeting that is scheduled later for today between the Committee of Creditors, and that is where the final call on this matter will be taken, and we'll get to know by the end of the day what that final call is.
All right, thanks so much for that, Vishy. Well, as Vishy said, he'll be sticking on to this story for the next few hours to tell you exactly what comes up by evening. Let's move to earnings now that came out yesterday. Britannia reported a steady quarter with profit rising 11%. However, margins remained flat at around 15%. Agam Vakil is here to take you through the fine print and the numbers that you have to watch. Morning. I mean, we've already spoken. Agam, I completely forgot about that. But what are the highlights for Britannia that you're looking at?
Right, Alex. So it's been a steady quarter and absolutely in line with what we were expecting. The numbers may just be a tad below consensus, but on the whole, it's it's been a strong quarter considering revenues rose as much as 10%. Margins, as you already mentioned, remained flat around 15.6% against our expectations of a little bit of an expansion, and profits rose nearly 12% on a year-on-year basis. Now, as far as volumes are concerned, considering the revenues are largely in line with expectations, the company doesn't report volumes, but if I were to go by analyst estimates, then the volumes are likely to be around 7%. That said, when it comes to gross margins, despite the fact that raw materials costs have gone up substantially, its gross margins have actually expanded by as much as 270 basis points. And if you actually take a ratio of raw material costs to revenues, that's at around 49% against 39%. However, this has been offset by purchases. So this again is something which has played out in favor of your gross margins. And the reason why we've seen, your overall margins remain flat is also the fact that the company has put in a lot in terms of promotions and ad spends, which may have worked against margins, at least as far as this quarter is concerned. But on the whole, not too much to speak for, a very steady quarter and in line with consensus.
All right, thanks so much for that, Agam. Well, clearly, one of the stocks that you have to watch out for in trade today, Britannia. There are several others that are in the news. Mishika Parak is joining us with the stocks and news. Morning, Mishika. What's on the list today?
We're going to first look at the important earnings, starting with Ambuja Cement. They came in with numbers that were below estimates. Their revenues were up 2% at 2,928 crores. Net profit is up 57% on the back of other income, which was 5 times higher at 240 crores. The EBITDA was down 9% at 463 crores, and margins stand at 16% versus 18% last year. They've also appointed Sonal Srivastava as the CFO of the company. Then we have the DCM Shriram, which came in with strong numbers. The revenues were up 21% at 1,888 crores. Net profit is up 484% at 292 crores. EBITDA is up 366% at 398 crores. And margins stand at 21% compared to 5.5% last year. TVS Motors meet expectations with their numbers. Their revenues are up 9%. Net profit is down 19% at 13 crores. EBITDA is up 4% at 308 crores, and margins stand at 7% compared to 7.4% last year. Lastly, Indian hotels came in with inline set of numbers. Their revenues were up 9% at 1,244 crores. Net profit is up 52% at 115 crores, which was again on the back of other income, which was up 81% at 37.2 crores. They had an exceptional gain of 14.8 crores versus an exceptional loss of 14.4 crores last year. Their margins stand at 23% versus 21% last year. We have auto sales of leading auto companies that have gone down this year compared to last year. Maruti Suzuki sold a total of 143,245 units for April 2019, which was 17% lower than last year. Escorts Limited sold 5,264 tractors in April 2019, which was 15% lesser than last year. And Eicher Motors Royal Enfield sold 62,879 units, which is again 17% lesser than last year. And lastly, we have Cochin Shipyard. They've signed a contract for construction of 8 watercrafts for the Indian Navy worth 6,311 crore.
All right, thanks so much for that, Mishika. And to all of you who have tuned in, do remember that we're just a tweet, post, or call away. Do keep all your queries coming in over the course of the day, especially on Ask PQ. We've got a very special interview lined up that starts in just a couple of minutes. Do stay tuned.